Pick it up, let's go! All right, everyone, welcome back to the discount. Today is Monday, March 13th, 2023. I hope everyone had a great weekend. And we're going to get into some macro stuff here. Obviously, with everything going on, everyone's wondering, well, what the hell should I do? Is my money safe? What the hell is crypto doing as the largest banks in the United States are pretty much failing? I mean, now, I understand Citibank, Bank of America, and JP Morgan are holding up as of right now, but we can get into some of those charts, and they're not looking too good either at the moment. So, could be telling us something we don't know. But let's just break it down simply by, as always, starting out with the S&P 500 or the spiders, the SPY. So what we've been saying here again, just week after week, is bullish above, bearish below the large trend line. And I want to show you something really cool and what you're going to be noticing today in this video. But it's something I've been calling out in the live day trading channel is look at how it closed. What was that? Friday. And then look at where it closed today. So it closed below for the second day in a row. Now, want to go to a 10-minute chart. So zooming in on this trend line on a 10-minute chart, here was Friday's action, bouncing off the trend line, bouncing off yet again, closing below right here. So this was and let me get my pen out here. This right here was Friday's close, okay? And that's where it closed. Now, you could see it was fighting it, broke down below it, retested it, ultimately closed below. And what does that tell you? Well, it's telling you that it's possibly wants lower prices into next week. What happened? Opened significantly lower, and then it rallied, popped above, ate time off the clock, really couldn't get above, and now it's closing below once again. Now, this is not to say that we can't get a pretty significant rally off of this trend line if we go back into the daily chart. We could certainly come back tomorrow, right? Start testing candles above, maybe test the 200 period and the 100 period, which is also, by the way, coinciding with another cool area that I'm going to show you right now. So this here is another daily chart of the SPY. And what I want to show you, and what someone had pointed out to me today, is this head and shoulders here. And if you do a measured move on this head and shoulders, let's just clone this here for a second. Okay, you're going to get a downside target of about 365, which is also an important fib level. So really what what this is telling you, not only you have this head and shoulders breakdown, all right, and then you have this information here, which has been fighting this really important downsloping trend line. Now, if we get some type of kind of rally off the news, the Fed's going to come and save the day type of sentiment, what this should do, and again, it's not a guarantee, but what this should do is it should come up, fight this once again, and let's put that line in up here. It should, right, be testing all of this important stuff. And for anyone who wants to get short, I know that was an ugly drawing right there, but everyone who wants to get short, that's going to be the opportunity to give you the short. When this rallies, if it rallies, and gives you that opportunity, just give yourself time on the clock. And I'm saying about 6 months. 6 months on options. I would prefer probably put options, but that's going to give you some time for this thing to really play out to the downside, whether that is in May or sooner than later. Now, that's obviously just the case if it decides to rally. Who says it's going to do that? I have no idea because honestly, it's closing below this trend line, which is bearish, and it closed again for the second day. Also, the all important XLF, right, which is the financial sector ETF. This is not good. So it also had a measured move target that finished pretty much on the dot or on Friday at around 32.50, and that is now closing below and in a really significant way. Obviously, all these banks are failing, are on the verge of failing, and the Fed policy, it's just pretty much too late. They were tightening too fast, too soon, too much, and then obviously they printed way too much to begin with from the pandemic. So it's just a double whammy, and it's really far from over. Now, if they pivot really hard right away, and let's say that they're like, okay, well, we're going to cut by 100 basis points. We're right away. The systemic risks are just too much. Now we have a really interesting scenario on our hands where, for the first time, you have an inverted yield curve that has been so steep. And I know we don't cover this stuff in this channel too much, but we have an inverted yield curve that is so steep for so long, which is, I think, like 11 times out of 11 predicted a very deep recession where markets go down 50, 80%. Okay. We're not talking about just like a 20 to 30% correction. We're talking about like a 50 to 80% correction where people really get poor, which is also a generational buying opportunity. However, this would be the first time where the Fed flips in such a scenario where the S&P, I think, is really only down let's see, like about 20 something percent from the all-time high. Yeah, so we're really only down 20%. So like we kind of joke about it and we meme about it on Twitter, but there's these scenarios where the Fed might really have to pivot here at some point. If it wants to complete that 365 downside objective, and then they pivot, and then boom, we're off to the races. But then here's the problem, right? The problem is the yield curve was tight for so long that typically when you're looking at past recessions and you're looking at when the Fed had to pivot, the damage was already done during this time period. So the damage was already done with the yield curve and interest rates during this time period. We're going to get, even if we get a significant rally with the Fed printing the money, ultimately we're still heading down. And that's really just going by history. Is it different this time? Yeah, I mean, of course it could be, but we're just going by history, and that's if the Fed pivots. So, just some macro stuff for you guys. If you want to look at yield curve history, do some research on that. It's all over the place as far as when yield curves have been inverted and then when markets really have turned. So it should be pretty interesting, nonetheless. Now let's get into the all important Bitcoin, guys. I mean, obviously, this is the story of the day. Now, the interesting part, let's go over this in three segments or a few segments. The first segment is what have we been saying on this channel is, okay, it has a gap down here and a big important supply zone right here. And then we have a gap up here. Okay, which gap is it going to fill first? Well, you have it, and it's going to fill that gap. Now, for those aggressive traders, certainly could have longed that zone. Very important zone, very important gap, big 100 period moving average. It just came down, boom, shot right into it, and gave you an amazing trade if you wanted that action. So let's see how it does, guys. If it just continues to close candles above, and I already have my drawing in here, but again, I said, like, it could just fill this gap, fake everyone out, and now it's got this gap to accomplish. So pretty cool to see Bitcoin. Now, I know from a macro perspective, everyone is saying, okay, well, banks are failing and Bitcoin is now, rallying so much and a huge day for crypto. Just be cautious out there. I mean, obviously I'm a believer. However, just again, be cautious because it's kind of a reminiscent of a sell the news type of event where you have the Fed and everyone's saying it's a new bull market because the Fed is going to come in. First of all, we don't know that 100% yet. But also, the Fed has backed and the FDIC has backed Signature Bank, which is crypto bank, and Silicon Valley, which is obviously a big tech VC bank. So, it could be just a sell the news type of event. I would certainly be taking profits if you're a short term trader, and that's just me. But nonetheless, got to respect the day, got to respect the move. As far as the lazy day trader channel, we really didn't have anything today, honestly. Now, when something like today, guys, is like really once in a lifetime for many, or at least once in a few generations. And you just want to be careful on days like today. So I did have a SPY short, and I will go over the SPY short. But as far as the lazy day trade setups, which you'll see in some of them in the track record, like big movers, we like big movers going into big important levels. eBay, ADSK, Adobe, Box, PACW, which we got by, but a day like today when you have the financial system cracking and things are just slicing through levels, I'm good. All we really need to focus on is the ETFs. So getting into the level that I had on the ETF SPY. So I had 391.50, but it just didn't get there. So 391.50, it came up. What did it get to? 390.27, just about. So, and it gave you a great short trade. But again, sometimes the best position is no position, and that's what this channel is about. We really just wait for the best setups. We don't force anything, and we keep the odds in our favor to compound them over time into a serious business. So, nonetheless, guys, this is really important day. Pretty scary day for probably a lot of people, the majority of people. But nonetheless, I mean, this should provide some pretty generational opportunities here pretty soon from an investing and swing trade perspective. And perhaps I will go over some of my favorite plays in the future. If you have any questions, guys, as always, please don't be afraid to DM me or message me on Telegram. Please let me know if you have any questions, as always, and looking forward to seeing you again on the charts. Take care.